the world of finance is very conversant with risk. They use it all the time. In fact, I would say more than engineering and architecture do. They actually really they think of risk, they price it in, they use it as part of their model, they use it as part of their day-to-day workings. And in fact, if you're not doing risk in finance, you're not doing a good job, right? You're not doing your job. And what I was trying to do in a sort of perhaps not the best way in my thesis was actually during my thesis, I kind of arrived at that conclusion, starting from classic engineering principles, energy plus simulations, and this is an input and that's an input, and I accept these defaults, blah, 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 and I move up. And the fidelity of my simulations must be fantastic. And realizing that the real world is messy. The real world has actors that don't understand or don't agree with what you're doing. So they're not necessarily ready to give you data or cooperate in ways. When you go into a building, if you have data at all, it's imperfect. Contextual data is a lot harder to get than you would think, like about the building itself. And at the end of the day, though, you got to buy the building or not. You got to improve the building or not. You got to sell the building or not. These are decisions you have to make. And the person who's managing your pension is relying on another person to make these decisions. And that person needs to make an investment decision, right? And I think this helps me a lot in my work, is to realize that what I was trying to push on from a climate risk perspective in terms of overheating, that was a specific uncertainty I was looking at, is what is the uncertainty in the simulations from a climate perspective. Actually, you're right, is exactly the same language, the same concepts as pricing in risk due to flooding or pricing in risk due to market shifts, right? Like what COVID did to office tenancies, right? That's affected GRESB indirectly because our clients, who are the managers of those office spaces, can't lease them out in the same way they used to, or markets have shifted. And so the performance of portfolios has shifted. People are selling assets that they used to own and buying other types of assets. So it's a strange connection, but actually it turns out we are trying to get to the same sort of answers when it comes to risk and uncertainty, using different words and different starting points. So I try my hardest to translate what I would do as a calculation into language and metrics and stuff that the other side of the table understands and hears, because they're like, oh, I know this metric. Like, I understand this, right? And then I can have this influence on them to say, actually, yeah, your flood risk really matters to your income.
Yeah. With your background, is the purpose of GRESB, do you think, always going to be the rearview mirror, in the sense of it's always last year's data, it's the data that's being collected? Or do you think, because the world of finance is a modeling world as well, the data that you're collecting and producing are going into, I imagine, fairly sophisticated models upstream to try and decide where assets go, where investments go. Is there an element of this at some point that does become digital twinning and AI and modeling and kind of predictive in nature in some way? Because you're becoming a huge repository for the performance of spaces. I imagine that information is like you said, the modeler in you must be itching with opportunity to go, oh, I wonder, do you think there's a line there somewhere? I mean, at the moment it's a firm line. It's very much historical, right? But is there an opportunity for GRESB to be forward thinking in that sense?
Absolutely. In fact, we are actively thinking about in a sort of gross term, the predictive power of GRESB, right? And the predictive power of GRESB is not going to be in the sense of the kind of digital twin that a controls company can build for you, or a consultant. That's a different fidelity and different world altogether. GRESB is never going to get into the business of saying, if you do this particular intervention in the building, here's the ROI, the payback, and whatever. And this is the performance changes, and this is what your woofy modeling to do this moisture that's not our world, right? But our world instead is we've created this artificial system of scores, right? And the system of scores represents material subjects and themes for risk and income and so on. Right? So once you buy into that, then you know that a higher score is better. Fine. And each asset contributes to the company's score or or makes it worse, right? Either makes it better or makes it worse. So in my world, I can actually use the metrics that I know about an asset or a new asset. You bring me a new asset and you know some things about it, but not other things about it. I can then model the impact this will have on when it leaves the seller's portfolio and when it enters the buyer's portfolio, right? The score contribution, as we call it. And we already have elements of this in a more static sense in GRESB already. So right now we can tell you what the score contribution is in the portfolio you submitted to me, but I can't tell you what happens at the point of transaction. So much like in theory, when in the UK you buy a building, you should look at the EPC and go, this needs about £1 million worth of work. I should price that in. In theory, you should do that. They don't always do that. In a similar fashion, I should be able to tell you that this, assuming all the permissions have been worked out, when you buy an asset of this nature or this characteristics, it'll have this kind of impact on your scores, which you can then have a conversation with your investor about, saying, hey, this is my strategy. I'm going to go into these markets for these reasons, or and there's good money to be made here and all that. But here are the risks that I'm taking on. So I'm going to invest this much money in improving those risks.
Yeah, like you said, the level of improvement in a Google headquarters might be fairly limited. But if you're an investor that wants to invest in the 1 and 2 star assets in a GRESB class, but you've got models for improving those scores with the nature of the business that you do, then all of a sudden you want to know. You want to say, actually, that this approach, I think I can bring this percentage of buildings relatively up a level, and that has an impact on.
I mean, there is a class of investors in GRESB who want to own only premium assets, 5 and 4 star and high scoring assets. Therefore, there is a class of investors who will buy 1 and 2 star assets, bring them up to the 4 and 5 star level, buy brown, sell green, right? So they benefit from the brown discount on one end, as in the discount that comes from highly risky, inefficient buildings. They are able to do the renovations and improvements in a way that's cost effective and good for the long term and so on. And then they're able to benefit from the green premium, which is a premium that people are willing to pay for good buildings and good assets. And this is a great outcome because I am now directing capital to exactly where it's needed.
Yeah.
Right? Improvement.
Yeah, exactly. What do you see the trajectory of indoor air quality in the GRESB world being over the next few years? Because it's clearly an impactful measurement of buildings. And the more we can show the impact of air quality, the more we'll get people to move in this sphere. How do you see in your mind's eye the trajectory of how air quality is valued in your world?
So if you read our Road to Performance, the newest publication, we publish every year our roadmap. And the newest roadmap is the theme for real estate is the Road to Performance. We have clearly delineated different themes or subjects that we are going to tackle one by one and make that subject mostly about performance and much less about disclosure because we think it's ready. So there is a sort of health and well-being, employee safety, that kind of bucket there, the pillar there, which is currently regarded as fairly immature. But there is a maturity curve we can work on, and it's one of the next priorities. I don't know exactly what the sequence will be and exactly when it will be implemented. But what I see happening is we have this, think of it as a curve of, like the crossing curves of disclosure goes down and performance goes up, the relative importance of, as a subject matures. So I see air quality starting in this sort of disclosure era of Do you have the data? Have you put in the sensors? Have you got programs to use the data? Stuff like that, like just intentions and disclosure. And then moving towards actually, are you delivering clean air in Delhi or not? Right. And that's what matters. And again, the relative benchmarking and all that comes into the picture, which is already built into the system. So I don't need to worry about that. I just need to make sure I find the right metrics that are benchmarkable, that are collectible, that are measurable, so that we can have a level playing field. And air quality has the floor. Certainly we will work on the floor, and we'll work on sort of the quality aspect. So yeah, don't be in a toxic environment, but also like move towards quality. And I think both things are, so the principles that we've established, I think, are fine. Principles being, if you're at high performance or if you're showing good improvement, both are valuable and they both get scored positively. Whether they get equally scored or not is a different matter. Depending on the maturity of a subject and how globally it can be measured and everything, we will move from disclosure to performance. Right? We will allow some level of specialized benchmark rating, like specialized scoring, to say that, and I don't know how this would work in the current system of stars, but to say that a thematic score, a thematics rating is possible. Actually, I know it doesn't work in the current global system, which is why we're proposing this alternative. So you could have a fund, let's say in Indonesia, in Jakarta, that exclusively focuses on, to begin with, energy and air quality only. Because in that market, those are two big, actually flooding, flooding. These three things they really focus on. And that's fine. That's good enough. So you do those three things. And then as you mature, you move on to the other aspects of GRESB, and you choose those pillars. There will always be a foundation. So think of it as a Greek temple. The foundation is the company has to be managed in a certain way. The pillars are the different subjects, and then the pediment on top with a nice frieze on it is going to be innovation, saying that there are things we don't cover. There are ways you can overperform. Biodiversity is a good example, right? A lot of Asian managers are really keen on biodiversity, especially in urban environments, bees and insects and pollinators and stuff. So I don't want to like cut that off, but I need a good way to continue to say that, hey, you've done something that's really valuable and for the world and for risk and everything, and good. So we should do that. That's how I see air quality entering the GRESB sphere in all the ways that we've just discussed, is following the same trajectory of from disclosure to performance, relative benchmarking, until it becomes truly a mass.
That's the question, is where it sits in that visualization of being the pediment or the pillar. Because people in the air quality world would obviously say clearly it's a pillar. A built environment, a built environment with poor air quality is not a sustainable building. It's clearly a fundamental pillar. But from an assessment perspective, it doesn't sound like it's really at the pillar stage yet. We need to move it. We need to be demonstrating that this isn't just about collecting data, that we're actually doing something with the building that's meaningful, that improves its value. Now, that work is happening, and we see things like buildings that have well building standards will have a higher value than those that don't, and so on. So like we're getting there, but it'd be interesting to see that trajectory happen from a finance end. And I think that's what Stefan Flagner was saying, the economist, who I'll tease him about what you're saying about fluffy. You probably know Stefan Flagner anyway, but yeah, it's the idea is we need more evidence. It's not that the evidence isn't good science. It's just we need to be showing the impacts of good air quality on the things that make assets valuable. That's the key. We need more of that, and that's what at the moment makes it light. Not fluff is probably the wrong word, but too light, too thin.
I will criticize the field of building science and air quality in particularly for one thing, which is to say and maybe this is something we were led into rather than we wanted to go into, is I don't need, and in the first instance, it'll be very hard for me to show things like productivity, but I can get into showing things like, well, I know PM has an impact on you, so you should have little to no PM, right, in your space. Like the pollution angle is something I can actually work with, I think, much faster than the productivity angle, because I don't know when we'll get to a good enough measure of productivity.